Good evening, everyone. I think this is the last session we have on this track, and I know we have less time than what we intended to have. What we'll try to do is in the next 45 minutes, we'll discuss some of the areas in terms of regulatory framework for digital banking and finance ecosystem and also set aside maybe another 5 to 10 minutes for taking question and answers. So we have a great set of panelists here with us. So what we will do is start with a brief intro and initial thoughts around the topic. So why don't we start with you, Divya?
Hello. Yeah. Hi everyone. I'm Divya, working as Senior Manager IT. I'm from Union Bank of India, currently handling SOC operations and Cybersecurity Center of Excellence.
So I am Rima Bose. I am a Vice President in Markets Technology, which is a line of business in JP Morgan Chase. I am the controls owner for the technology and cybersecurity controls. We also share our thoughts on the topic.
Yeah, absolutely.
Okay, we'll go with the intro first and then we'll share the thoughts on it.
That's fine.
Hi, good evening, panel. So I know it's a fag end session of the day, and the topic is slightly boring. When it comes to regulatory, it's a kind of big topic. So myself, Mohammed Yuniss. So I was working with the subsidiary of the regulator. Currently, I'm no more working with that. So I was handling the regulatory audit for the financial institutions. I hold 13 plus years of experience in this industry. Thank you.
My name is Rajesh Jain. I head the product security engineering practice of engineering. The charter of what we do is help our customers develop secure products, and so I look at primarily the engineering aspects of how the secure products and solutions are developed. In terms of the regulatory requirements, what we do is we primarily look at how we look at the regulatory and compliance requirements and build that into the product design and development process. So that's what we do as part of my charter. I think our overall financial environment is very well regulated. There are a lot of acts and guidelines by RBI, Reserve Bank of India, as well as other associated bodies. I think it's one of the very highly a very well regulated sector. I see banking and finance industry being the only sector which has a lot of regulations and guidelines around it. If I look at other sectors like healthcare, automotive, high tech, there are very few. Most of the standards which we follow are primarily drawn from international standards, and there are no specific laws and acts in India to regulate those sectors. So I would like to, Divya, if you can put together your initial thoughts around overall landscape of regulatory ecosystem around digital banking here in India, and then also talk about some of the RBI specific guidelines which are around that.
Hello. Yeah. RBI launched its Master Cybersecurity Framework in the year 2016. So that is still the Bible or the Bhagavad Gita, whatever you call, for Indian banks as a whole. That is a major framework. And recently, last November, there was another master directions for IT GRC controls with effect from April 1, 2024, which is more about the cyber governance. So RBI has involved the board of directors and the governance framework, and RBI has also stated what are the committees to be formed, like an IT strategy committee, what is the role of a CISO, whom he has to be reporting, how frequently the committees has to meet, and what are the different controls needs to be having, like from the SOC perspective, from the VAPT perspective, red teaming, ethical hacking, how is your patch management should happen, how the antivirus or the latest updates should work, how the IAM, the identity access management, DLP, and every different category of the cybersecurity framework has been frame. Of course, when you take up some smaller banks or the urban cooperative banks or the rural banks, so they have budget constraints, so that is one constraint probably which is challenging for them to implement some of the security obligations or the regulatory obligations which the RBI has made. Apart from that, the public sector banks are fairly doing well. I think RBI, as Rajesh mentioned, one of the very, very well regulated industry, and I think Indian banks are one of the best when it comes to the regulations followed and the resilience for the cyber attacks is concerned. Indian banks are doing fairly well among the globe, and not only that, RBI has also established IDRBT, and we have something like IB card, which is an information sharing analysis center. So they are going to give us the inputs like threat intelligence, that these are the IPs hashes or these are the IOCs which needs to be blocked. So we are receiving a lot of information from them, and there is a special team which is working on that. Apart from that, CERT-in is always there, and there is a specific sectoral cert, like a FinCert is also there, who is looking after the financial industry as a whole. And since most of the banks are like dealing with public money, we are under the National Critical Information Infrastructure. So NCIPC is also guiding us. So of course there is a fatigue and complying with so many compliances, and the number of hours in which the incident has to be reported, and compliance wise definitely that is a challenge. And with respect to employees, of course the awareness part is also a very big challenge, because most of the organizations, it is a tick mark that you have to complete your LMS module and okay, it is checked, no matter whether the employee is really focusing on learning and implementing that as well. And of course at the board level also, CISO was just a compliance person for some time ago, but since RBI has been very strict, now everybody right from the top management is involved in decision making, is involved in risk management. But when we talk about customer perspective, there is still a challenge, because every now and then you may be getting some malicious APKs, like your KYC update, Aadhaar update, click the link or download this particular application so that you can update your KYC. So that way stopping threat actors, like no matter whatever solutions we are having, but customers are still getting fraud. Even most educated people are also getting frauded. But with respect to the applications which banks are maintaining, they are very resilient because they are undergoing periodic vulnerability assessment and all. The major hitch in probably I would say government organizations or the public sector is the skill shortage, because every government or the public sector hires through all India exams or some of the common entrance exams which you have to write after your graduation, and you don't have a clarity in which department you will be posted and whether you are a specialized cybersecurity professional or not. So they will be posted anywhere as per the career pathway, and the people are not skilled enough, and even they don't have the facility to hire anybody from the market and give compensation just like the private counterparts, like how the private organizations or the banks or other people hire. So that is one hitch in the public sector, where the hiring process is also, there is a mismatch in the skill set and the compensation. So that is one thing. So most of the things are managed by managed service providers. So we onboard certain system integrators who take care of everything, and there is a very less probably visibility or the control with the actual employee. So that is one grey area I would say, where the threatscape is we are navigating. That's a complex challenge.
Thank you. I think you touched upon a lot of different areas, and we'll go into details in each one of those. Rima, your initial thoughts?
Okay, so I believe the role of the financial regulator is to provide a controlled environment through their standards, policies, laws, to align private behavior with public interest, so that there is a stability and integrity in the financial system, and there is trust from the public in the system. So to instill that trust, to instill that stable economic environment of a country, that's the primary role of a financial authority. Um, of course, like being a GCC or a global bank, it's not just one country. We are, and all of these thoughts are really my own views and not JP Morgan's views. So all global banks actually comply with different countries, maybe 180 different countries, frameworks, standards. Our own security, cyber security, has to be updated on a regular basis with the new laws and acts.
Sure, thank you. Yuniss?
Thank you, Divya and Rima, for your insights. And if you ask me, from the title itself, it says that it's an obligation. Obligation comes first, then it's expectations. So ideally, our regulations, Indian regulations, ideally not only RBI, a lot of other regulators are there, like who is regulating the other markets like SEBI, even NABARD supervisors, RRBs, a lot of regulators are there. So their expectations, like if you see traditional banking, brick and mortar banking and financial systems, whatever we were going through, our older generation was going through. Now Gen Z customers, what they're going through, it's a need of the hour to improve the regulation. So one side, on the other end, operational efficiency is growing up. So sitting globally anywhere I can open an account. Ideally, it's not only for banking. There are some restrictions, but still, for a general discussion, I'm saying, ideally sitting anywhere I can open an account, either in a bank or something. Parallelly, there are risks evolving. So ideally, operational efficiency as well as the improvement in risk and compliance culture needs to be run. It's a two sides of a rail. Ideally, now it's a need of the hour. So to crisp and say it's a need of the hour is like tone at the top. Now all the regulators are running forward. I can see DSCI is one of the forum who touches upon quantum engineering. So we had a summit also. Honestly, tell me how many of you are aware of quantum computing before the session? No one. Quantum threats, quantum risks, anybody? No. So ideally, it's nothing but whatever data we have now down the line after 30 years or 50 years, quantum computers may take. We call it as harvest now and decrypt later. All our data adversaries may save it now. They keep it themselves. In future, if quantum computing comes, all the cryptographic systems may go away. That is quantum threat actually. So, how many of you have gone through this SEBI CSCRF? Cyber resilience framework now recently they have released, SEBI last week. So that regulator, somebody in previous one of the panel discussions, somebody was mentioning about the proactiveness. How proactive regulators are. Regulators are running behind the technology now. Previously that was not the case. If you see 10 years back, the technology will evolve, then the regulator come and put some restrictions or put some regulations on it. But now it is not the case. If you see the SEBI's regulatory framework, they have touched upon the quantum threat. It's clearly mentioned that future of quantum threat. So they are touching upon the quantum threat. So this is the role of the regulator, which is the need of the hour. This is my point of view.
Sure. So there's so many technologies, so many frameworks. Things are changing very, very rapidly, and as a banking and finance organization, it becomes very, very difficult to kind of make sense out of what is happening out there, what is relevant to you, and of course, for example, if you are operating in India, you will definitely get governed by RBI guidelines. There is influence from acts and standards which are from outside global standards as well. If you have to draw parallels between the cybersecurity framework by RBI versus the other international standards and frameworks which are out there, and how do you really go about being compliant with that? Would you want to throw some light on that, Divya?
RBI, of course, it has drawn certain frameworks and regulations, probably from the global standards like NIST and ISO, but it's way, way beyond that. ISO is, as we were discussing earlier, it's just like a checklist. So there are some 114 controls, for example, in ISO 27001. So the auditor comes and just say, okay, this is there, this is there, this is there. But RBI is way beyond. Whatever regulations they have imposed, and apart from the master directions, every month or once in 2 months we are getting the advisories. This is the thing which you have to implement. RBI is always one step ahead or many steps ahead with respect to regulations. Yuniss has also worked as an auditor, so we are an auditee. So they have something called RBI IT examination, which is done exhaustively for all the organizations. So something of a huge public sector bank, it will go for 3 weeks, 4 weeks. RBI is going to come and sit with us and in detail delve into the logs which we are storing, all the evidences they see, and they prepare a huge report out of it, and they'll guide us. They are not going to pinpoint that, okay, this is wrong, this is right. They are hand-holding us. So RBI is doing a great job with respect to that. There is something called C-Site, it's a computer cell of RBI. So we have some portals for compliance where we are submitting our key risk indicators every now and then. So it is very, very vigilant of how the financial organizations are operating in India. So they don't just give the regulations and sit quiet and just check whatever compliance we are submitting. They come, they examine, and in case there is a necessity and there is a huge risk factor, they come very frequently and they will handhold and guide us and continuously monitor. So that's the beauty of RBI, I would say.
Great. That means we are in safe hands.
Yes, definitely.
As far as the data concerns, which some of the people in the audience were talking about, so there's a lot of
huge
rigor in terms of governance and overall
otherwise
security.
the penalties are in crores. You have seen what happened to one of the small payments bank recently for KYC issue. I wouldn't name, everybody knows that.
Right.
So it's very, very strict action will be taken. So they don't care for anybody. If you're doing good, you're doing good. If not, you are penalized no matter what.
My next question is for you, Yuniss, and this is again about some of the requirements which are put on payment card industry, primarily. So if you can draw some parallels between the guidelines by RBI and how they relate to the PCI DSS, requirements, and how do you go about implementing and managing those?
It's a nice question, Rajesh, but thing is that RBI, of course, they cover upon PCI DSS, so they insist the financial institutions to comply with standards like PCI DSS. Not only that, there are some more circulars which states that to keep the payment data secure. So there is one master direction called Digital Payment Security Controls. So this covers holistic of entire digital banking infrastructure, which covers your mobile banking, net banking, card infrastructure, ATM switch, HSM, everything. So this part of cards and HSM that covers the PCI mandates like PCI, PTS, lot of frameworks are there as per the standards, PCI standards. So that needs to be complied, and this is one of the major mandate which is issued by RBI in 2021. So this is one of the major circular. And if you ask me, like 2018, RBI had laid down guidelines to insist that the payment data means not only the card data, except card present transactions, whatever online data is there, like whatever transactions we do through online. So through the entire payments ecosystem, whatever data is there, that needs to be stored within India. And this has to be confirmed by all the payment aggregators, payment gateways, everything. It is mandated by the RBI, and banks who were tied up with all these payment aggregators and payment gateways needs to submit a confirmation to RBI that the respective payment aggregators and payment gateways have migrated all their technology stuff and they are storing the payment related data only in India. So this granular level of things regulators are now seeing to ensure that they are complying with the global standards such as PCI DSS, and they are ensuring that none of the sensitive information is being stored in the ecosystem. Like if you are a card issuer, for example, banks may be card issuers, so they are exempted from this. So they can store the card data in plain text. Similar to this, RBI had laid down another circular called card on file tokenization, where in which the merchants need not store any card data in plain text, and it should be tokenized before storing. So like this, RBI deeps dive into granular level to ensure that the card related and payment related sensitive information is not leaked out in compliance with the global standards like PCI cases.
Sure. And as a follow-up question, does it also cover the UPI related transactions as well?
UPI, yes, obviously. UPI, there is no laid down in procedures, but as a best practices, this VPA, payer VPA, payee VPA, this should not be visible in plain text and it should be masked. So, this regulators are insisting.
Sure, thank you. The next one comes to you, Rima. This is about anti-money laundering regulations in India. Would you want to talk about some of those and how you comply with them?
Sure. So AML KYC is closely tied with cybersecurity. So many of the cybersecurity regulations are also used in detecting fraud in payments. So if you don't know, like in anti-money laundering, you're basically there is a lot of so there is something called like sanction screening. Then there is the anti-terrorist funding. So there is a various data crunching that happens behind the scenes to tackle fraud and money laundering. So what happens is data security is very, very crucial in both cyber security as well as in anti-money laundering. So identity theft is another thing, account takeover. These are the ways how payments fraud take place. And these are also where cybersecurity steps in. So multi-factor authentication is one of the tools to, or rather the processes to tackle account takeovers and identity thefts. So with anti-money laundering being a very core focus area and KYC, like we spoke about, one of the very stringent actions that was carried out by RBI for not having appropriate KYC processes in place for a payments bank. So when we are talking about like data security, submitting all these KYC documents and how it is used, well, it is used a lot to prevent such frauds from happening, or to restrict the area of how much impact it can have. So AML regulations, anti-money laundering regulations, actually this terrorist financing, anti-money laundering, this goes back many, many decades. It used to happen with paper trails, like audit trails, and there would be a financial auditor who's coming and looking at the money trail, so to across the globe to tackle the terrorist financing. Nowadays, it's very much system-based, it's very much data-based, and we are also using AI in areas, AI and machine learning to learn about patterns of payments that happens. For example, one of the money laundering schemes can be to have a slight mismatch in the address. Suppose there is a known terrorist cell somewhere in Europe, and in the same PIN code maybe, with a slight difference in address, there is amount of transaction that is being made. So normally this will not catch the eye of someone. It is not reported in any suspicious activity filing. But with machine learning, so there's a fuzzy matching logic that happens that, okay, this PIN code might be, there is a certain percentage of chance that this is a money laundering that is happening. So those are the kinds of areas how AML standards and frameworks are being developed to tackle such kind of creativity that we are seeing in this field.
Yes. and great example of how technology can be leveraged to actually detect and flag some of these, which used to be more of a manual effort earlier. Uh, Yunus, we talk about data security and fraud prevention, and one of the key controls, technology controls, which you look at is multi-factor authentication, wherein you're not just banking on your password alone, and even if it is compromised, you have a second level of second factor which can protect you from various frauds. So, how do you see the MFA, multi-factor authentication? Is this a guideline by RBI? What are the challenges do you see in the banking and the payment industry in implementing this kind of control?
So that's a good question, but I'll take up the challenge first since you told challenge. So the challenge lies with the end customer. So how the end users are going to accept it. So if we are doing the transactions, so like global payment players have gone up to frictionless authentication methods like FIDO, all this stuff. But how Indian ecosystem is going to accept the end users, how they are going to accept. If you ask me, like the regulators are insisting to have AFA, MFA, all this stuff. Recently, RBI had laid down the draft regarding this MFA, and they had opened this draft for public comments up to September 15th. So it clearly states that this additional factor authentication for the digital payments is to be mandated. The first factor of authentication should not get repeated with the second one. So it should be a combination of both, like what you have, what you know, such things. So ideally, if you see the other regulators, like for example, like we have broking like Zerodha, like Upstocks, they have their own MFA. Like if you want to log in from the web browser, you cannot do it. You need an app, or authenticator. You need something like that. So ideally, the end user acceptance for these stuffs are already there. But if you come to a traditional banking like mobile banking, UPI, and NPCI has recently launched UPI Lite, where in which up to 5,000 you don't need to give any PIN or something if you set it. So already the ecosystem is slowly starting to accept it. But if you consider this implementing MFA, ideally the technological challenges, budgetary challenges. For example, if a small cooperative bank, how technologically they are equipped to implement this MFA systems, that we need to see. Their license challenge along with the end user challenge.
Absolutely. And I think your example of UPI Lite also kind of demonstrates the fact that a lot of this is risk-based, right? You will not mind doing small transactions without providing your PIN, and it actually increases your ease of use. At the same time, when the amount of the transaction goes higher, you would want to have another factor of authentication. So all of that is kind of risk based, and that actually leads me to my next question, which is we typically have risk coming in in the entire technology ecosystem from various places, and all our digital solutions are made up of multiple technologies, multiple vendors contribute to it. Your software is coming from somewhere else, your hardware is coming from somewhere else, somebody else is integrating it. So the overall third-party supply chain, management, the risk management, and how do you see that? And what are some of the best practices, which we can look at to kind of address that? Yunus, maybe we can start with you.
It's a nice question, but with respect to TPR, like I'll tell you how regulators sees the financial institutions. I would like to quote a small practical example since we are in Bangalore. Like you have a best friend, you have a two-wheeler, you are going to give the two-wheeler to your best friend. Assuming that he is having driving license, he'll wear the helmet while driving. So he'll be using your two-wheeler for two days. After a week, he is returning back. So after a month, if you go and check with your vehicle number, you will be fined. Either that your close friend would not have wear the helmet during the ride. Obviously, you have to pay for it, or else you will be suffering. So this is the simple real life scenario which the regulator sees the banks. So the banks have multiple tie-ups with the multiple vendors. So ideally, the banks cannot, as Divya rightly said, our financial institutions are not having that much skilled talents 100%. Like a lot of new technologies are coming in, blockchain is coming in, AI is peeping in. Ideally, industry they need to rely upon some technology service providers. With this technology service providers, if something goes wrong, regulator will not be suing that TSP. Ideally, the respective financial institutions is going to be held responsible and accountable. So they will be penalized. So whatever actions the third party service provider, ideally the regulator expects that technology service provider and third party service provider to comply with whatever regulations RBI has laid up, and they need to be in line. If they are offering services to a financial institution, they should ensure that their systems are safe and secure, and they also comply not directly, indirectly, as they are offering the service to the bank. So that is the expectation of the regulator, and RBI has laid down its own master directions on the outsourcing services, what needs to be taken care. It's a complete Bible. So even up to the granular level of legal binding agreement between the financial institution and the service provider is clearly mentioned, what clauses needs to be mentioned, and what is lacking currently in the financial institution is the oversight. So ideally oversight on their third party risk providers. Recently we had come across some of the downtime with respect to our digital channel which affected the cooperative banks. So this is due to the lack of oversight by the respective financial institutions. So the regulators are very strict and stringent about that.
Sure. And I see a lot of there is a lot of dependencies on the partners to deliver the digital services which you are providing. There is also a lot of in-house development of solutions which you are doing, right? And the kind of solutions you're developing internally, which are not being done through third party, you are responsible as an organization for that. Rima, any thoughts on that as to how you really take care of different supply chain risk? And when you build something, even if somebody is not doing it for you, you are using components which are, let's say, open source components in your technology stack, right? How do you take care of those kind of supply chain risk? Any thoughts on that?
Definitely. So there are standards and policies for everything because we are talking about compliance. And in-house or even third-party vendor solutions, the risk is still owned by the organization that the customer is entrusting the data with. So the whole purpose of having this framework or having a compliance to data regulations from RBI and other regulatory bodies is that there is transparency and there is efficiency both. So when we are developing in-house solutions, we are ensuring that there is management of vulnerabilities or management of any weaknesses and gaps in our controls, where there can be a cyber actor can gain a foothold into the organization and there can be data leakage or there can be some misuse of systems. So third party or in-house, there has to be a periodic risk assessment to ensure that the gaps are appropriately managed and try to fix gaps in cybersecurity. So maybe later we'll talk about things like pen testing and penetration testing and cyber attack simulation exercises and incident response frameworks, resiliency frameworks, the business continuity plan. All these are aimed towards having risk management of systems both in-house and third-party development.
Sure. Thank you. And I think that's a good segue to the next question, which is, what tools and technologies banking sector and the finance sector uses, or you have seen in your experience using to be compliant with some of these regulatory requirements and also address some of these third-party risk and supply chain risk. What do you want to talk about that?
Yeah, I think if we follow the entire cybersecurity framework of RBI, minimum 30 security solutions a bank will definitely have. It various things like SIM, of course, for incident management and response. Now, many banks who are going for a next gen SOC, they are also going for SOAR, user entity behavior analysis, privileged identity access management, data loss prevention. We have something called backup monitoring because the backups also have to be taken very frequently because in banking, every second crores of rupees transactions happen. So we need to have a real time DCDRC. So the backup, how it is being monitored, how the patch management is happening. Suppose we are allowing mobile devices to the employees, so the MDM has to be there and how it's regulated, and the file integrity monitoring so that the content of the file shouldn't be changed, especially if it is a confidential information. Network level, we have NBAD, packet capture analysis, of course the firewalls at various levels, intrusion detection system, host IDs, and many solutions. The deception technology also we have mostly incorporated in most of the banks. So many tools and technologies are there. I think there is a gap with again the people and the process how it is being done. So mostly there is a huge dependency on the managed service provider. Though we government procure the best of best solutions, you have all the SLA, non-disclosure agreement, everything. And in case you have purchased the entire Microsoft Office suite for crores of rupees, probably you are just utilizing 10% of its capability because we don't know what is the capabilities offered. So whatever the system integrator or the managed service provider says, okay, this is the thing which is available. So mostly the employees are accepting because they don't have the knowledge how this tool can be leveraged to the maximum potential. And mostly if you consider a simple example of VAPT, what Rima was mentioning, you have some big names called Nessus, Qualys, Acunetics, Verbsuit, and many things. In every scanner, you will generate multiple vulnerabilities and you will finally end up, if you scan, say, internet banking website. So you will end up with some 100 vulnerabilities with high, medium, low critical vulnerability, and the vendor or the managed service provider is going to generate that report and dump it on the internet banking team. So what the internet banking team will say, so since it is being monitored, they'll start closing the critical one, then the high, low, medium, at their own pace. They are going to test it on UAT, DR, and then finally move that change into production. But nobody knows whether that vulnerability is going to really affect my system or not. Something which is shown as critical by Nessus or Qualys may not be actually critical in my environment or the ecosystem, or I may not have that component itself, but the team will sit and spend a lot of time on that. So all the systems, what probably solutions where every bank is working, they're all working in silos. And there is no unified view at a high level, there is no unified view of what is my real threat, what is my real vulnerability, where I have to sit and patch, where my resources have to spend time. They are just calling every department, okay, you have so many dependencies, you just close it, you just close it. No matter what, you have to close it because RBI audit might come, you just have to be complying with that, they have to submit the KRI. So everybody is working so much on the false positives and resources are wasted. I think probably with some AIML capabilities and nowadays good solutions on application security posture management and continuous threat exposure management solutions where there is some auto discovery and auto cyber risk quantification which is happening. Probably with some good capable solutions, now the trend is definitely improving. It is reducing a lot of manual efforts put on by the analysts because they are sitting 24/7 just sitting and closing the brute force attempts or the false positives which is generated, because if you are from SOC, you know how many incidents you handle per day, especially with large organization having 5,000, 10,000 assets. It's becoming so monotonous and we actually miss the real threat probably while closing so many false positives. I think this is one of the biggest issue. No matter what tools we have, leveraging the tools to its highest potential and educating the team and hand holding the team and between the boards, means the CTO and the CISO, if they are in the same pace, and the digital banking team is in the same pace. Because for a CTO, launching the mobile app in Google Play Store or the Android, like the iOS store, and making it live or giving new features and ease of convenience to customers is a priority. But whereas when it comes to CISO's clearance, security is one of the main priorities. So there is always a conflict within the board. So this is also a big thing, no matter what tools we are using. I think
Absolutely.
practical issues.
Absolutely, and I think these are some of the real concerns, right? Why technology is helping.
Of course, the budget. And
Yes.
nobody can convince the MD CEO why I have to spend in so many tools and technologies. Unless RBI says nobody is going to spend any money on the security solutions.
Right. So I agree, and so while technology, as you said, is helping, it is also kind of drowning you with so many data points which you don't know what to do with, and newer technology like AI ML can really help make sense of huge amount of data which is being generated by all these different tools. But with all these technologies, frameworks, tools, you need people, right? And what are some of the issues you face from overall talent availability standpoint? And how do you kind of manage that? Some of the best practices you want to share as to how you take care of the supply of the talent, which is so rare, so scarce, in this industry.
I think I'll talk from a public sector perspective, and Rima can throw light on how it's going on in the private sector. Because in public sector, as I initially mentioned, the recruitments are well defined. Like you get recruited through a government examination, and there are transfer policies where every 3 years or 5 years you have been moved. Because of vigilance guidelines, you are not supposed to be in the same department for more than 3 to 5 years or something. So somebody who's working in net banking will go to internet banking, they can go to operations branch banking, and then after some 20 years they might be coming and working in the CISO office department also, but without having any background in cybersecurity. This happens in all the government organizations, including the biggest of all, I will mention. So this is the thing where nobody has any background of cybersecurity, and he is made CISO because of his experience in banking. So of course it is good because he has multi-functional experience, how the business works and how the ground level works, but that is kind of detrimental because he will not be in a good position for decision making. And the real practical problem which happens in government organization is at a branch level, if somebody is handling customers face to face, you are sanctioning loans, you are giving lockers and doing so much of transactions in business. So somebody who wants to relax from facing the customer, who needs a back office job where you don't have to deal with customers. Usually those people who are interested in administration work, they are just coming just to go away from business pressure, because the cybersecurity doesn't have some business pressure. So just to avoid business pressure, some employees in the government sector, they are choosing cybersecurity, which is again very, very detrimental to the organization and nation. And there is no lack of upskilling, because there is upskilling and continuous learning will not be there. एक बार government job मिल गया तो I'll retire at the age of 60. So in between there is no learning, because whatever they learned in their graduation, they might be agriculture graduate but handling a cybersecurity position. So there is a total mismatch with respect to skill shortage. And in syllabus also, whatever our engineering students are learning currently, there's a huge gap between the academia and the industry. So what the industry wants and what the students are learning, there's a huge gap. And there are no good internships because nobody wants to give a college student a responsible cybersecurity job directly. So there is always that gap which needs to be bridged. AICT is coming up with some guidelines, and there are some collaborations, various communities, including DSCI in connection with Microsoft, is working on that to train the students also. And DSCI is also bringing up women from break, maybe the maternity break, or from tier 2, tier 3 cities where they don't have facility. I think they are coaching those women, especially only women, with along with Microsoft partner. So that is a great job. I think if that initiative can be done at a bigger level, whoever is taking break and whoever can be trained, they can just join the workforce, because cybersecurity skill shortage is a global crisis which every organization around the globe is facing. Apart from that, there are so many certification bodies where you can pay money and get a particular international certification, and such people are also getting hired. That's again a non-ethical practice of onboarding cybersecurity professional, because that person can become an insider threat to your organization because they have just paid some money and got some certifications and got hired. This is also happening in most of
To
the.
add up your point, Divya, so I would like to say some organizations now, like for example, they are posting GRC, minimum 3 years experience is required. Maximum 3 years experience is required. It's a kind of middle level fresher with all the certifications, CSAR, CIS, where in which the certification itself requires 5 years of experience. So that is how the industry is now. So there is always a supply demand gap is there globally, especially in the field of cybersecurity, as Divya said, in the banking sector as well as in the IT OT sector. Now there is a huge demand rising up. So there is no skilled people available.
I think that's skill shortage is there across levels, like starting from a graduate hires who might want to employ a SOC analyst till the CISO level actually. So there is a lot of colleges are introducing cybersecurity courses. Regarding regulatory and compliance courses, I haven't seen anything. There are certifications from like Data Security Council, and it's really no private sector will not be employing someone to train that person into a certain skill set. So nobody wants to put so many dollars into training. So it's somewhere one has to start. So in a lot of organizations, we have people moving laterally from IT, from development into cybersecurity, which is also good, I think, because they come with the IT engineering background, and they can learn certain cybersecurity domains like identity and access management, and they can then employ best practices into the field. So certainly there is a lot to be done and said. I guess we all recognize that there is a shortage of skilled talent, let's work towards it, because with so many laws, DPDP and new data localization and so many different regulations that are coming up, there is a recognized need in the industry for specific cybersecurity SMEs and data security SMEs to be employed in each project.
And I think it's very well established that there is a huge gap in demand and supply, so that cannot be overemphasized. And what do we do to address it? From my organization standpoint, we hire a lot of graduates from colleges, and some of the work which you alluded towards that is working with the academia and looking at how can we integrate some of these topics and modules in the cybersecurity area in their maybe final semester or the seventh semester, and we have been working with some of the institutes and engineering colleges to develop some of those modules ourselves, and becoming that as part of their overall curriculum, as well as getting some of these people as interns and getting them trained, kind of on the job training in some of these areas. So that's how we try to address it, because a lot of times it's very, very hard to get people from from the market, and the only way is to get people with the base skills and you train them on the areas you want to address. So I think we are completely out of time. We will maybe take a few questions from the audience, and then. So anything? Yeah.
My question is when different regulatory bodies are involved, like different countries are involved, like, and the laws are a bit contradictory, like localization or right to be forgotten. In this scenario, how do you handle? My question is to Rima.
Okay, thank you. I'll take that question. So, these are very large projects with millions of dollars of investment, data localization requirements. So, in global corporations, in GCCs, there is standardized frameworks, GRC, using tools, GRC tools and systems, where everything is basically architecturally defined as to where the data is stored. So when there is a regulation that comes and maybe conflicting regulations, one application is having data from both India and Europe, and both of them are asking for data localization. So there is a need to architecturally solve that problem, to have different data centers being used. And trust me, most global corporations are having data centers around the world to solve this problem of data localization, or just to comply with data localization requirements.
Yeah, I think there is a need to harmonize a lot of these requirements and regulations which are out there, and many of them have fairly common themes. They all talk about data security, data privacy, and if you look at various geographies, there are nuances in terms of what you need to comply with in a particular geography. So I think every regulation or standard which is out there, you will find a lot of commonalities, and those are easy to comply with. But the ones which you struggle with is where there are variances, from one regulation to another regulation. And if you are an organization which operates across different geographies, it becomes a big challenge for you.
I think it's
So I request everyone to please join GBR2 for the final session of the day. It's a masterclass on enterprise Gen AI and governance. Challenges, ideas, solutions and practices when LLM Ops is taking over enterprise IT business operations. The speaker for the session would be Mr. Bose, sir, CEO DSCI. So post the session, we'll have the networking cocktail dinner. So thank you everyone.